Hey, welcome to Tesla Shorts Time Daily, episode 406. I'm Patrick in Vancouver. Today is March 13th, 2026. Here's what's happening with Tesla today. Tesla gains a stake in SpaceX by converting its $2 billion xAI investment, deepening ties between Musk's companies. Let's dive right into that one because it's a fascinating financial move that connects some of Elon Musk's biggest ventures. According to Drive Tesla, Tesla has converted its $2 billion investment in xAI into a minority stake in SpaceX, and this just got the green light from the FTC. This isn't just about shuffling money around, it's a strategic play that gives Tesla a piece of SpaceX's growth, especially with talks of a possible SpaceX IPO down the line. From a business perspective, it strengthens the synergies between the companies. Think about how SpaceX's satellite tech could enhance Tesla's vehicle connectivity, like better over-the-air updates or navigation in remote areas. For Tesla shareholders, this diversifies the company's assets and could unlock long-term value as SpaceX pushes boundaries in space travel. It's a reminder of how interconnected Musk's ecosystem is, potentially accelerating innovations that benefit Tesla's core auto business. I see this as a smart hedge, positioning Tesla to tap into advancements in areas like Starlink integration without starting from scratch. Now, shifting gears to some competitive news in the autonomous vehicle space. Teslarati reported that Lucid has unveiled its Lunar Robotaxi concept, positioning it as a direct challenger to Tesla's Cybercab in the robotaxi market. This comes at a time when autonomous ride-hailing is heating up, with companies racing to deploy scalable, self-driving fleets that could redefine urban transportation. What stands out here is Lucid's focus on affordability and integration, which might push Tesla to speed up its own Cybercab rollouts and refine its full self-driving software to stay ahead. For the broader industry, this signals intensifying competition that could drive down costs and improve tech reliability, ultimately benefiting consumers looking for safer, more efficient mobility options. From a technology angle, it's exciting to see how these developments might force innovations in sensor tech and AI, areas where Tesla has a strong foundation but can't afford to rest. Lucid's entry could also spark partnerships or consolidations, reshaping the landscape for autonomous services. On that note, there's more from Lucid that's worth mentioning. They've announced a partnership with Uber to expand their autonomy plans, according to recent buzz on X. This collaboration could help Lucid accelerate robotaxi adoption by leveraging Uber's ride-hailing network, creating fresh pressures on Tesla's ecosystem. It's generating a lot of talk because it shows ride-hailing giants aligning with specific AV players, which might influence how quickly these technologies scale in real-world use. Tesla, with its in-house FSD development, will need to demonstrate superior reliability to keep its edge in this evolving race. Next up, let's talk about some positive sales momentum out of China. TeslaNorth.com shared that Tesla's sales from Gigafactory Shanghai surged 91% in February, with 58,599 vehicles delivered, even as the overall Chinese auto market slumped. This kind of growth highlights Tesla's ability to buck broader trends through aggressive pricing and a strong export strategy, shipping vehicles to markets like Europe and beyond. Why does this matter? China is the world's largest EV market, so maintaining momentum there helps offset any slowdowns in other regions and keeps production lines humming. From a manufacturing standpoint, it's a testament to Shanghai's efficiency, which has become a cornerstone of Tesla's global output. Competitively, this positions Tesla well against local players like BYD, potentially allowing for more investment in R&D back home. I think it's a solid indicator of resilience, especially with economic headwinds in China. Tesla's adaptability here could be a model for other markets. Speaking of market expansions, there's good news for Canadian buyers. Drive Tesla noted that the Model Y rear-wheel drive now qualifies for Canada's federal $5,000 EV rebate, which could make it a more attractive option for budget-conscious shoppers. This eligibility lowers the effective price, potentially driving up sales in a country that's pushing hard on EV adoption with incentives amid high fuel costs. For customers, it's about accessibility. The Model Y is already a bestseller, and this rebate targets everyday drivers looking for an efficient SUV without breaking the bank. Business-wise, it helps Tesla expand its footprint in Canada, where EV infrastructure is growing, but competition from legacy automakers is ramping up. It's a timely boost, especially as Tesla refines its lineup to meet regional demands. Along those lines, Tesla is also launching the three-row Model Y L in Australia and New Zealand, with orders open and deliveries starting in Q2. Drive Tesla reported starting prices at $74,900 AUD, and $83,900 NZD for this six-seater, filling a gap for family-sized EVs in those markets. This matters for Tesla's global strategy as it taps into high-demand regions with limited options for larger electric vehicles, strengthening their competitive position. From a product perspective, it's about versatility, offering more seating without compromising on range or performance, which appeals to growing families. It could accelerate EV uptake down under, where environmental awareness is high, and help Tesla build on its strong brand presence. Now, on the energy side, Tesla has won approval to supply electricity across the UK. After an 8-month review, Drive Tesla says Tesla Energy Ventures can now sell power directly to homes and businesses, expanding beyond batteries into full utility services. This is a big step for Tesla's energy division, potentially disrupting traditional providers with integrated clean energy solutions. Technologically, it aligns with their vision of sustainable ecosystems, combining solar, storage, and now distribution for more efficient power management. For the business environment, it opens new revenue streams in a market that's prioritizing renewables and could set a precedent for similar expansions elsewhere. It's thoughtful progress, showing how Tesla is building out its energy arm methodically to complement the EV side. I appreciate how this ties into broader grid stability, especially as EV adoption increases demand. Switching to robotics, Elon Musk shared a big update on Tesla's Optimus 3. Teslarati covered Musk's announcement that they're finalizing Optimus 3, described as one of the most advanced humanoid robots, with production ramping soon. This pushes Tesla's ambitions in AI and automation, starting in factories but potentially extending to consumer uses like home assistants. Why it matters: robotics could diversify Tesla's revenue beyond vehicles, revolutionizing industries that rely on manual labor. From a tech viewpoint, it's about advancing humanoid capabilities in movement and decision-making, building on Tesla's AI expertise from FSD. It's an area where Tesla is innovating boldly, and this update suggests they're closer to real-world applications than many expected. Related to that, Tesla showcased Optimus at the AWE Electronics Show in Shanghai, highlighting its features to a key audience. Teslarati noted this exposure in China, where robotics demand is booming, could lead to partnerships and build hype. It positions Optimus as a future pillar for Tesla alongside EVs in a market that's hungry for automation tech. Now, one thing worth watching is the intensifying competition in the EV SUV space, particularly with Rivian's latest launch. Drive Tesla reported that Rivian has unveiled the R2 SUV starting at $45,000, with deliveries planned for Canada in 2027, directly targeting the same midsize segment as Tesla's Model Y. This challenge is significant because it offers comparable range and features at an affordable price, which could draw customers away if Rivian executes well on production. That said, Tesla is positioned to handle it thanks to its massive scale in manufacturing, established supercharger network, and continuous software updates that keep the Model Y fresh. Competitively, this might prompt Tesla to roll out enhancements or pricing adjustments to maintain its lead. It's a legitimate pressure point, but Tesla's track record in scaling suggests they can adapt without losing ground. Taking a step back from today's headlines, let's apply some first principles thinking to the scalability of global charging infrastructure. The fundamental question is, how can Tesla ensure universal access to fast, reliable charging without relying on fragmented third-party networks? The data shows Tesla's network has over 50,000 superchargers worldwide with a 99% uptime rate, handling millions of sessions annually. But with global EV adoption projections, demand could outpace build-out by 2030, potentially needing 10 times more stations based on current growth and the physics of charge speeds. Tesla's approach breaks it down to basics, optimizing site selection with real-time vehicle data, standardizing hardware for modularity, and integrating solar and battery storage to cut grid dependency. It's similar to how they vertically integrated battery production for cost efficiency. The bottom line is this could solidify Tesla's lead, making charging as seamless as refueling gas cars and encouraging broader industry adoption through standards like NACS. Before we go, tomorrow we'll be watching for any updates on Lucid's Robotaxi progress and how it might influence Tesla's Cybercab timeline. That's your Tesla news for today. TSLA closed at $395.01, down 47 cents, 0.1%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow.